Hello, let's take a look at my bearish and bullish scenarios for silver. So we're gonna zoom in a little bit on the 6-hour chart and focus on this right here. So here is the recent high on silver, and now we are examining if this move here is corrective or impulsive downwards. So the first scenario are bullish. So here we are counting this as a wave A, B, C, W, A, B, C, X, A, B, C into a Y, and then we move up to take out another high. And the invalidation here is the 161.8 expanded flat invalidation, because that's a very rare target for a wave B. Then we have a finished zigzag ABC, where we are counting this as a 1, 2, 1, 2, 3, 4, 5 into 1, 2, and then 1 ABC, 2, and then we move up into higher prices, taking out this high. Then we have another bullish scenario, so ABC, WXY to A, B, C, D, E, a triangle like that. A running triangle is the most common triangle, so that's why I have included it in this chart like this. And after that, we move up, taking out this high. Then we have a leading expanding diagonal, which is uncommon, but it exists. So ABC, 1, 2, 3, 4, 5. And now I see that we have reached the minimum target for a leading expanding diagonal. So that is great for just this scenario. And after this move, we are looking for like 1, 2, and then we go up, taking out this high. And another scenario here is ABC to an A, ABC, W, X, Y into a B. And the minimum target has just not been reached for a wave B to validate this as an regular or expanded flat, which needs to happen for this scenario to be valid. If we then move on to the bearish scenarios, then we need to count this as a 1, 2, 3, 4, 5, a truncation. That is extremely rare. That is just when everything else fails and you have already tried expanding diagonals, that kind of thing. So truncations is so rare. But I noticed that on another chart on the Owanda, where we had this wave 5 went below this wave 3. So therefore I am including it, otherwise I would never include it like this. But since it showed up on another chart, yeah, why not? It is a possibility then, because if they are right on the Wanda chart and I am wrong on my DX feed chart, well, yeah, you need to be aware of all the scenarios basically. So if we pretend then that this is not truncated, then we have a clear 1, 2, 3, 4, 5 impulse down, and then we are looking for A, B, C into a wave 2. Now we have hit this, which indicates that it's a lower probability wave 2, which lowers the probabilities for this scenario. And the invalidation is taking out this high. But if this were to be a 1 ABC, we are looking for more downside. And the last bearish scenario, I'm going to update this because it moves all the time. So this is a leading diagonal. So 1, 2, 3, 4, 5. So a 1, 2, 3, 4, 5, looking for lower prices. And the invalidation is taking out this high. Which one of these have the highest probability? If we start with the WXY sideways, well, it is perfectly fine. A, B, C, X, no problem here. A, B, and then C. As long as we don't hit this scenario is perfectly viable and yeah, has a high probability. But if we touch this has no probability basically. Very, very slim. And also it's very important because we are expecting a wave C here. So 1, 2, 3, 4, 5 into wave C. If we get something else, then this scenario doesn't have the highest probability. And also after this 1, 2, 3, 4, 5, it's very important that we have a 1, 2, 3, 4, 5 structure up, because if we get a correction like this, then it is higher probability to continue moving down. So that is very important to be aware of. So yeah, unless we touch this has a very high probability, and we are expecting then to take out this high to move up to new highs basically. And this, so ABC and then 1, 2, 1, 2, 3, 4, 5, 1, 2, 1 ABC. This is very ugly. This is basically just throw in account, and you don't break any rules, but you are breaking guidelines. I mean, not breaking guidelines in that way, but you are not really, it's not the most common wave 3 that you have ever seen, but and things like that. And wave 2 hit the 886 and things like that. That doesn't really increase the probability. So I would say this scenario has a lower probability, but it's available and it exists. So we could be done here, and then we move up. And this could also turn into something else like a leading diagonal, but we haven't got all of that information just yet. So, but the invalidation for this scenario is taking out this, and the low probability wave 2 is if that is hit, yeah, then this scenario has an even lower probability than it already has. But as I mentioned, this could morph into something else like a leading diagonal more clearly, but as of right now, it doesn't have the highest probability. But still, this scenario is looking for new highs, taking out this high. The triangle is looking fine, but WXY that we basically need to have here in this move, just because of this structure, and also because of this, like an ABC here, because in my chart, as I mentioned, we haven't taken out the low here, so we need to have an ABC here. And it's not very common to have a WXY in a wave B of a triangle. So that lowers the probability, but still it is a perfectly viable scenario. So yeah, and after this, as I mentioned, we are looking to take out this high. And then the leading expanding diagonal. A leading diagonal is very rare in itself, and expanding diagonal makes it even more rare. So this has a very low probability, but unless we take out this high, it exists, and yeah, basically all the roads lead to Rome, so we are all taking out this high with all of these scenarios. It doesn't really matter which one of them we are focusing on right now, but yeah, so ABC here, ABC W X Y into wave B, as long as we don't touch this invalidation up here at 98,395, this scenario is very much in play. So yeah, this could turn out to move like this in a very choppy way, and then a clear 5-way structure down where everyone is thinking that we are moving to lower prices, but then we turn around in a clear impulse 1, 2, 3, and there is where I'm looking to join the trend. So yeah, perfectly fine. And what about these? Because these are important because they are the only ones that are bears. So 1, 2, 3, 4, 5. If we are pretending that this is not a truncation and that we are actually hitting this low, taking out the low, this is an ending expanding diagonal in wave 5, which is extremely uncommon. It happens, but it is very uncommon, which lowers the probability. ABC, yeah, perfectly fine, but the time here in wave 2 is approaching the 4 fib time, and we have already passed the 3 fib time, which is not really preferred. It is okay, but if we get to the 4 fib time here, yeah, that lowers the probability significantly for this scenario, meaning that it is a higher probability than that we are taking out this high. So the last bearish scenario, yeah, the leading diagonal. You don't really want to count a diagonal unless wave 4 is in, but for the sake of having an option, another option as a bearish option, we need to include a leading diagonal as well. So yeah, as long as we don't take out this high, this is very much in play, but it's very, very early to talk about the leading diagonal given the information that we have. Yeah, so if you want to check out my full macro count on silver, just click on the link in the left corner where you can see the whole structure and all my count, which is very much relevant because that is on a 3 monthly chart. and here we are just discussing the 30-minute chart. So yeah, I hope you enjoyed the video. I hope it was helpful to you, and I hope you have a great day.